All right, folks, welcome back. So we have had a few weeks off. I've really enjoyed my time off. I've rested. I've had a lot of reading time and just quiet stillness. That's what I've been really wanting to do. And it's been very pleasant to do that. So I appreciate all of you working with me in regards to having that. Before I get into it, the week of Passover, which is coming up here. Most everyone in the United States refer to it as Easter. I don't call it Easter, but Passover is coming up, and I will be giving you pre-recorded videos that week, so there won't be any trading on my part. I fast that week, and I don't want to do any kind of trading or any kind of speculation, none of that stuff that week, so I'm going to kind of keep things, well, like I said, I want to go back to the way I used to do things, and that's the way it's going to be. So, apart from that, then we'll be back on a regular schedule. I'll remind you as we go along, but don't worry about it. That's the next period of time where you're not actually getting a steady flow of videos and commentaries from me. Real quick, before we get into it, a bit of housekeeping. I told everyone I was going to remove month 1 through 6 from the server. You should all be downloading them or have downloaded them. We have had a few students report that 1 or 2 of their months had issues with the password not working, and I'm sure that was attributed to the migration we had in our last server. Because you've already watched all that, you just didn't realize it until now going back and trying to download the videos. So we're still working through them, so I'm extending it through till Monday. So Monday, 9 p.m., you have to have month 1 through 6. And the reason why I'm giving it to the weekend is because there's about 40 different members that have issues with month 6 for whatever reason. That month had an issue carrying everybody's password and username into that part of the server. So it's a real quick fix for us if you have an issue with any of the months, month 1 through 6. Predominantly try to do that for right now. If you have other months, we're not going to get to your email that quick because we're asking you to title your email what month that you're having an issue with where you can't open up the videos or download them. And if it just keeps asking for your password and username, that's what I'm referring to. That's what it's going to look like. That's how you know there's an issue. And if every other month works when you put your username and password in, but one particular month, it's most likely going to be the month 6 because it's like the major one everybody's having an issue with. It's real quick. Staff goes in, puts in your username and password back in that server area, and then we tell you to try it again after you clear your browser history and all the cookies and reboot your computer. You'll be back in business and it'll be no problem. You can download that as well. This month, I want you to be downloading month 7 through 12. Okay, this entire month of April, you want to be downloading month 7 through 12 because at the end of April, on May 1st, they will be removed from the server as well. The commentaries, you're going to need to be downloading them as you can, but they need to be done by May because June 1st, there will not be any videos hosted on the server because the server will no longer be paid for by me because it's too expensive to keep going on. And I'm not asking you to pay. I don't want your money anymore. You've fulfilled your role. You're downloading the videos. They're for your keeping, lifetime access. Everything's rolling into the forum, so we'll be operating through that. Also, last bit of business, and then we'll get into this commentary. Some of you are using a third-party forum copier, and it's causing your username to show an exorbitant number of page views. If you use that, going past today, I will ban your account. Period. Okay? The reason why that's happening is you're using some kind of a program and you're copying the form. You don't need to copy the form. The form's not going anywhere. Okay? So if your account starts running multiple page views, and I get a report now generated every single day. There's a number of you have already reached out and told you there's absolutely no way for you to have 100,000 page views in a month. We don't even have that many pages in the forum. So I'm taking that as you're doing something you should not be doing. And I don't care what your excuse is. You are abusing the forum. You're abusing the service. Okay? So if you are doing that and you try to log in, say next week, and your account doesn't exist, it's because I banned you. Okay? There you go. All right, so if we're looking at the dollar index, this is our daily chart. And by the way, thank you very much for everybody that's reached out and sent me emails. I didn't sit down and read all of them, obviously, but a lot of you were really receptive to me showing the live account results and such. And yes, it was my genuine opinion that that's about what a new student under my tutelage would show probably in the first year, in that type of result. Obviously, results are going to vary, but I think that is the high end, and then anything beyond that, would be obviously based on the skill set that the student has built up in their own experience. Not meeting that is not a bad thing either, but nonetheless, I appreciate all your feedback, but you don't need to keep doing that. All right, so daily chart, dollar index. All right, so we've had, obviously, the Ukraine stuff going on. I promise I won't go into any of that kind of stuff and make the video longer than it needs to be. The uncertainty spells likelihood for the dollar. Now, if you listen to all of the people on YouTube that aren't really traders, they're just kind of like economists or fear and gloom, like the end of the world, Armageddon, those types of things. It's great for clicking and getting views, that clickbait type thing. I don't see the dollar collapsing. Okay, I don't see that, because I think they're going to roll this thing into the digital dollar, and that has to remain around for that to occur. Okay, and yes, China, and yes, Russia, and India, and other countries are trying to work around not having to use, and Saudi Arabia also, trying to make their commodities, oil and such, to be purchased with specific currencies, like the Chinese currency, now the ruble. Russia's saying, hey, look, you want oil, you're going to have to buy it with rubles. The dollar still has its foot in the door. Now, I'm certain there will probably be something, if this is to collapse, I'll probably see something coming and say, hey, look, this is what I think. But right now, I think we're going over $1, and it could still spike up into like 104, 107, 105, that area. And the next levels are here. This imbalance here. You see how we're just consolidating. Came back down into this volume imbalance. Notice how many times we went into it? Once, twice, 3 times. This needs to go through it. In other words, this imbalance here, we need to trade through that. And if we come back down, it should act as support. I don't really want to see it come back and act as support. I want to see it just overlap it completely, then come back into this area here, find support, and then run higher into this area, and then take out the high, work into that 150, 180 level on dollar. So basically, long story short, I'm bullish dollar. Hourly chart on the dollar index. We have this imbalance here. That's the next short-term objective on the upside. We had a nice little return back into this buy-side imbalance, sell-side inefficiency. So that bullishness sends price higher for dollar, weaker on euro and cable. 15-minute time frame on the dollar index. You can see again that return back into that bullish breaker. Buy-side imbalance, sell-side inefficiency, optimal trade entry, and then it sends it higher. Really nice institutional order flow. All order blocks supporting upward price movement, and up close candles are being taken out on the outside. So everything is bullish for institutional order flow. And I left that little piece up here to keep your perspective zeroed in on that. We'll call it 99 level. That's the next objective, obviously, but I'm still thinking we're going to go above the dollar mark, or $1, one full 100. All right, euro dollar daily chart. We had this level here before we took our break, or I took my break, and we traded down into that, obviously in my absence. We had a really nice reaction there, pulled back off of it, found some support at the top end, premium high of the buy-side imbalance, sell-side inefficiency, optimal trade entry, and then started working higher. This is consolidating only, in my mind, to set up another wave of selling. Okay, so I think it's going to have some distributions to the downside, take out that low, and we have the breaker here. It's also reacting into that. So high, higher high. Didn't quite get to it there. did there, but then one more time to wipe it out. And then to me, I think it needs to overrun this. So it's basically the opposite of what I said for the dollar index. We want to see this overlap completely and then find some resistance in these levels here and then send it lower. Hourly chart euro dollar. Here's what we have here. The market has had a sell-side bounce, buy-side inefficiency breaker. That's what's being shown here. So we trade up into that. Institutional order flow intradrill there. Then sells off. Fills in this inefficiency. Works into this buy-side bounce, sell-side inefficiency there. So we'll dig a little bit deeper into that. I like to see it find some resistance there also and then find it trade lower to attack the sell side below here. And 15-minute time frame, we have, I already noticed that I did not do the extra slide. Let me make sure here, double check. Yeah, I didn't do it. So what I was planning on doing was showing two slides where this blue level or shaded area in here wasn't on the chart. It was just showing the relative equal highs and inside of this range here that was shown on the hourly chart. You can hear my rust now, see that? Been away from the game too long, I see. T, you're over the hill, buddy. I got to tell you, my voice is a little raspy from doing the commentaries I did yesterday. So I did all three of those videos. It was a little bit over like an hour and a half or so worth of talking. But man, when I was done, I felt like I had razor blades, slicing up my throat. I know that's never been an issue for me to stop talking, obviously. I'm going to try to get through this without doing too much of it. But anyway, this area here, I wanted to have just this shown also as a slide, not have the blue shaded area here with this bearish breaker. But we trade up into that and then focus right in here. Okay, that little portion of separation, it should be actually right on that candle and that candle. Yes, it's very, very small, but it goes right up into that, hits that inside the bearish breaker, and then sells off. And we have a nice little fair value gap there. Trades up into that, and then runs the relative equal lows, and then consolidates going into today. And it's real ugly price action, really nasty consolidation, just drifting lower. If you were ever to ask me, like, what type of market can you not trade in ICT? Is there something that you can't find footing on and find a trade in? It's that right here, this kind of stuff here. I can't really work within that, so because it's back and forth, there's no real inefficiencies here versus what I'm going to show you in the British pound. Okay, when we get to the British pound, you'll see a little bit different story there. But Euro just really is hard to work with when it's like this. Any market that's like this is hard. Let me state this before I go any further and leave the Euro, but because of the Russian-Ukraine business and Putin saying that basically, if you do these things, then basically the whole entire Eurozone is going to be in war with Russia. Now, I promised I wasn't going to go into all this stuff, but I want to make sure you understand that because of that underlying tension, okay, because of that underlying concern, the central banks are really, really watching this currency, and it could be a black swan. It could have a huge move that could literally take you completely out. All it takes is something happening, a bomb dropping. Okay, it doesn't need to be a huge, big nuke. It could be just a tactical nuke. But if that nuke word gets thrown around in the news, that's going to create such a firestorm of panic and just uneasiness, and that's going to reverberate through all the markets, and it's going to be point blank in the face of the euro. And what it will do, I don't know, but I just want you to be very cautious trading this particular pair, because all of the things that I would expect a black swan event to occur in, like this, it's kind of it looks lethargic, right? Real sleepy, nothing really going on, and then boom, something happens, and all of a sudden now everybody's like, what the hell just happened in that currency? That's what I'm concerned about. And there's a student I've been working with, Kenny. Yes, I'm not done with you, but just be careful with this particular currency, okay? Because this one here, I've already said enough. Just be careful with it, okay? If you're going to be trading it, trading with very, very, very light leverage. There's other markets to be trading. You should be actually trading in the index market right now. We'll cover that towards the end of the video, but for now, just know that we're looking for lower prices on euro, higher prices on dollar. All right, takes us to British pound versus US dollar. This is our daily chart. So we had a sell side imbalance, buy side inefficiency. We did eventually work towards these relative equal lows. I mentioned that before we separated in terms of having an ICT break. So we had a mitigation block here. It worked up inside of that, traded down, created a sell side imbalance, buy side inefficiency. We worked up into that about a week and a half ago or so. And then started to work lower. Relative equal lows over here. This is where my attention is. Okay, I'm thinking it's going to want to clean that little area up and down here. I'm not saying that's all that it'll do if it goes lower, but that to me is where I think it's likely to draw into. Liquidity sitting right in here. Whose liquidity would that be? Large fund liquidity. They like to leave their stops far away because they don't want to be worrying about short-term fluctuations and just static price action, just taking them out. So we'll be looking for this to roll over. Now, obviously, if we take out the premium high of this sell side imbalance, buy side inefficiency, then obviously I have to revisit this idea. But right now, as long as we're below the premium high here, I'm bearish on British pound and looking for this level here. All right, British pound, US dollar, hourly chart. Looking at this market here, I want you to take a look at this and pause the video. Okay? You like that? Special effects. That's ICT, top of the line, George Lucas level special effects. All right, so in this price action, I want you to think about what I said in regards to what I could not efficiently trade in when it came to euro. But I want you to look at the British pound here and tell me what you see. In other words, pause the video, see if there's anything inside this consolidation here that would warrant any kind of a special attention, something that meaningful price swings would move from. Don't be upset if you don't see it, but I'm going to show you this is the difference between what I was referring to in euro, that it's lacking, but is seen in this type of price action here, because I can operate in something like this. I don't prefer to, but this is a little bit more forgiving versus than that of the euro. All right, so pause your video, take a look at it, study it, and when you're done and you think you've exhausted your own efforts, then press the play button on the video again. I know, you didn't want to pause the video. All right, so we have a little imbalance in here. So the range high and the range low here. So that's your dealing range. Okay, it's moved between this low and this high, and it's consolidating in between those extremes, the high here and the low here. The highest imbalance left in the marketplace is here. The lowest imbalance is down here. Notice there's no real imbalance down here. Nothing in here is an imbalance. It overshot it here, and this is the only imbalance we have. And didn't quite completely close that in. You notice that? It rallied. Then we have this little imbalance here. Notice the bodies of the candles here. This is going to be the bulk of the volume. This is broker related. Okay, this is always going to be the permissible price action that you have to weather. Okay, and we have a rejection block here. We'll look at that when we drop down a lower time frame. But notice the bulk of the volume is being encapsulated by that imbalance. So we have a premium array to discount array, matching the premium fair value gap to a discount fair value gap. So being a seller in here like this and reaching for that discount, that would be something that I could operate in. I could do some trades with that mindset and scalp it. But it takes a lot of experience, and it's really just a matter of like a practicing. Like I wouldn't go in and say, okay, I'm going to put 3.5%. I wouldn't even put really 1% on these types of trades. But for practice purposes or tape reading, just staying close to the market, this is what I could operate in something like this. But I could not operate in something like I was showing you with the euro. That would literally either stop me out, frustrate me out, I would just completely collapse the trades, or I would just simply never even consider it. And that's most likely what would happen. I would see nothing in the price action to work with. Whereas this is a little bit different. You can still define your premium and discount PD array matrix, and then define the premium arrays versus the discount arrays, and then work with that in regards to the actual trading range. It's here. All right, here is the 15-minute time frame, and there's the rejection block on the 15-minute time frame. It runs through the imbalance, but again, look at the bodies respecting that nicely. I have a small little fair value gap here, overshoots it, but trades right back into the higher time frame fair value gap. Consolidates, spend some time in here with time distortion. We break lower below here, come right back up into the consolidation. It's here. We break lower again. Liquidity is below these lows and in that hourly discount fair value gap. So we trade once more above relative equal highs. Small little imbalance here. When it's in consolidations like this, these small little micro fair value gaps, they tend to be like little, well, mega magnets. Okay, there's little tiny little insignificant separations in price like that. It's going to want to go right back up in there. Now it does go over a little bit from what we would expect with that low, but look what it's done here. Here fills it a little bit overzealous. I'm not quite sure. My eyes are not going to permit me to see if that actually touched. I apologize, I didn't check to see that, but you can do that on your own. And then once more here hits it, and then we break lower. Institutional order flow entry drill here. After taking the short-term lows out, what do you aim for? Liquidity, liquidity, discount array, fair value gap on the hourly chart. And like gangbusters, it delivers it beautifully. Lower prices on euro, we're looking for that. All right, brings us to E-mini NASDAQ futures. I'm going to do the E-mini S&P for the lecture on the YouTube later tonight, so I'm not going to touch that here. But for the NASDAQ, I want to take you into this down close candle here. That's your bullish order block, and it's likely to trade down into that. And that's the draw on liquidity. I want to see it reach down into that. If it can get into that, that would be, in my mind, the best case scenario. We do have this imbalance here. This buy side imbalance, sell side inefficiency. The market opened here, traded up into the order block, that level here, back into the previous day's range. Judas swing, that type of event, we're looking for it to draw down into the discount array being the order block. So from this movement here to here, split that in half, we're in a premium. It's going to reach to a discount. The discount is the order block, and it's a daily time frame array, so it's much more meaningful, impactful, and it's going to draw heavily on price. We also have a swing high after running above relative equal highs. These highs here are a little bit cleaner on the E-mini S&P, but nonetheless, just compare and contrast, and you'll see that they are absolutely obvious levels of liquidity. And once they took that, now we're back inside the range. It doesn't mean we're done going higher, and it doesn't mean I'm making this a call for a significant high that takes out the lows down here. Too early to tell. I'm just looking at things that I would have been interested in today. Admittedly, the first part of the day, I was watching price. I was sitting in on a YouTube or listening to it's Trades by Matt, in case you haven't looked at that. But I was watching him and seeing his group's sentiment, what they were expecting, what they were looking at. Trying to get a feel, because I've been away from the markets for a couple weeks, and I kind of want to get a feel for retail, not to be disrespectful, but a lot of the folks in his live stream are neophytes. They have really no idea, and I guess by his own admission, he's a neophyte as well. So it helps me get a feel for sentiment. Now, it doesn't mean he's wrong all the time. It doesn't mean he's right all the time. It just means that that's an opinion that's not going to be linked to anything I'm looking for in terms of price action, and that's what benefit it brings to me. Not just him. There's other ones. I don't want to make a long list of people that, because you're going to make it. Well, some of you in here may take that as me poking fun at some other individual, and I'm not. I'm trying to be respectful. I'm trying to be an encouragement to Matt, because I think if he turned things around, got away from that volume profile, I think he could be consistently profitable, but I would never say that to him. All right, so here's those levels carried over into the hourly chart, that shaded area, fair value gap. Now we went below it, so it's going to act as what? Resistance. Okay, so those levels are going to be significant when we go into lower time frames, and we have a swing low here, and we have the return back up into the hourly sell side imbalance, buy side inefficiency, trade back up into that, and it just happens to be the high end or premium high of the buy side imbalance, sell side inefficiency on the daily chart. So we trade right up to that, and we're likely to see it go lower, reaching into the daily order block. So I'm kind of like looking for this to kind of like continue into, working towards these lower level daily time frame objectives. We also have a swing low here. If I'm wrong, it'll be trading above this high. As long as we're trading below this premium high of the buy side imbalance, sell side inefficiency on the daily chart, which is basically the high end of the blue shaded area. Okay, as long as we're below that, I'm bearish on NASDAQ. All right, so here's that hourly sell side imbalance, buy side inefficiency. It fills that there and starts to sell off. We're going to take a look at this wick right in there. All right, so here's a 15-minute time frame with that hourly sell side imbalance, buy side inefficiency added in. See, we changed up into here rather nicely, and then here is the 9:30 a.m. equities opening, trading up into the fair value gap. Okay, so that's your opening entry. The trade that you would take at 9:30. It starts to break lower, and you have to work in the lower time frames to get the other objectives. So inside that small little fair value gap there, that's your entry on 9:30 in the morning, looking for a run below the short-term low, and then reaching towards and gravitating towards throughout the day to get to that daily bullish order block. Now, obviously, in the benefit of hindsight, we don't see it traded to that at all, but it still offers us opportunity to at least work towards that goal. And then towards the end of the day, we see it trade back up into, it's kind of like what I was expecting it to do in the PM session. Obviously, it's kind of like a TGIF trade. So TGIF is thank God it's Friday. It's not a religious trade. It's just simply a cute little way for you to think about what's the range been doing all week. If it's been one way, Friday tends to be a retracement back into the weekly range. And while I was expecting a little bit more downside, once it started to pop up, I was expecting this high. Did see a little bit more aggressive run back up and maybe even revisit here. But, you don't always get what you want. Here is a 5-minute chart of that 15-minute time frame fair value gap, the 9:30 candle trading up into it here. And once it spikes in this opening here, it spikes up into that. Nobody on YouTube, nobody in Instagram, nobody on Twitter would see that run up in there and look to go short. Only us. And that's what's amazing. I love that because we're a minority, okay, of technicians. We're mechanics with price action, okay? We can go in and see an underlying tone in the marketplace that largely goes unnoticed. Now, yes, my stuff's becoming mainstream in terms of fair value gaps and looking for specific elements of market structure and time and price elements. And yes, all that stuff will be talked about and it'll start to grow and grow and grow. But it won't change things. Okay? It won't change the way the markets are booked because you're always going to have these little areas in price action. Because there's always going to be a rush for the market to move to a specific direction or a specific location. And it's going to create these inefficiencies. That will always exist. Always. That's the other reason why I made that known on the YouTube mentorship level. Not the other things I'm teaching here. I don't mind this one being in everybody's pocket because it's basically a gap. Okay, it's a gap. These things have always existed in price action. Before electronic trading, they existed. And traders used gaps sometimes. Many times they didn't notice the gaps that were there. Okay, they were only looking for the actual gap. The difference between yesterday's high and today's low. There's a gap. Okay, so if the market comes back down and trades into that gap, when we had open and closing sessions where there would be no trading in the open outcry, the pits that were in the futures market, They don't necessarily have that anymore. So now you have all these electronic trading markets. So gaps don't exist in the same way they used to, only on the Sunday gap opening. Now you do have gaps with the futures market because there's a pause in trading where they stop trading for a little while in the evening, and short time after that they restart trading, and they can be gapping higher or lower in that regard, and that can create the classic gap and go or gap and fade. So those things have obviously been talked about in terms of like my catapult trade and whiplash. They were trade setups that I taught on baby pips, and they're just basically simple little things that when gaps were actual like that, or weekly gaps, and on Sunday's opening, those types of trades were of interest to me. But now I don't want to be a participant at all on Sunday, and I honestly have not for years even paid attention to Sunday's opening in that regard, like to trade the gaps. I really have not been that actively pursuing an interest in that day. It may be largely attributed to the time element, because I don't have that much time because I'm teaching all the time, and you guys are always drawing my attention because of emails or things that are in the forum or things I have to do to finish what I'm doing with you. So I never had a real interest or an affinity to stay at that, but those trades do obviously exist. So don't think for a moment that, because I'm teaching fair value gap on YouTube, it's the end of the algorithm. If this is going to fall apart now. No, it's just one little piece of something that will enable folks that are not as fortunate as you are being here to be able to find something and hopefully be able to feed their family, because that's really what I'm trying to do there. It's like my ministry. I don't want to sound churchy or preachy, but I'm trying to do my best to be an encouragement and also to find a way to put something in their hands that they can make money with, and let them chase, the extremes in that. If they want to become millionaires with it, I believe that what I'm teaching over there can do that, but I'm just trying to help them meet their ends meet. This is our first one back in April. I know some of you were looking for videos in March. I did not put any videos up in the mentorship forum because I was relaxing. And I mentioned that in the last video post on February. I said there would be no videos posted in March. So there is no March 2022 videos to download. There is no thread in the forum for that either. So it's going to look like there's a missing month, February 2022, and then April 2022. There is no missing March 2022, okay? There it is. That's the first one. Since I'm back, I got to take a break now and then work on the lesson I'm going to do with the YouTube channel. Make sure you watch that, okay? Some of you mentioned in an email that you're not trying to watch anything over there because you don't want to get confused. Tonight's lesson will not confuse you. I think it'll be helpful. It'll be beneficial to you, especially if you're looking at the index futures. And I think that's where all of your attention should be at right now. Whether you choose to want to trade them, as your main staple instrument, you should be still studying them. I don't think Forex is the place to be right now. Okay, I don't think it's worth the risk. And even if you're not going to trade the actual underlying futures contract like I'm showing you here, and you're outside the States, then you can trade obviously the CFD. We can't trade the CFD legally in the United States, so we have to trade the futures market, which is where I would prefer to trade anyway. But the CFDs, you guys can trade that. You may reside. Those markets are still applicable to what I'm teaching you here. Okay, they're very close in terms of what you see in this chart. Generally, you're going to see the same thing in the CFD. Not marked to market perfectly, but close enough for you to be able to carve out a niche and get your pound of flesh. I will be incorporating that in the teachings on the YouTube channel. Okay, so I don't want to put it here because I want to be compliant with everything that's legal in America, because you have paid me, and I don't want to be enticing any students here to work with a CFD illegally with an offshore broker. That's why I will not touch it here. Okay, I'll go into greater detail over there on the YouTube channel, and you guys can glean what you want to get from that information over there, and then work with what I'm giving you here in the mentorship with the actual underlying futures markets. And that, my friends, is going to be it. I will touch base with you, obviously, next week. Let's see, I'm all out of whack here. Let me think. Yes, Monday. Monday, we have our meeting in commentary. Then I do a YouTube on Tuesday. I'm reminding myself. I'm sounding like I'm telling you something, but I'm actually telling myself. So Monday, I'm with you all. Tuesday, I'm on YouTube. Wednesday, I'm with y'all. Thursday, I'm on YouTube. And then Friday, the weekend commentary, I'm with y'all. So, okay. There you go. I had to get all my bearings back again. So with that, folks, have yourself a very pleasant weekend. Be safe, relax, and we'll be back at it again on Monday. Take care.